I am often asked this question right here. What is the best tax strategy for me? The way we kind of do strategy at our company is basically through 4 levels. A lot of people will see something on TikTok or somewhere else that says, I don't own anything, my trust owns everything. Anybody know who says that a lot on TikTok? It's Pace Morby. He has a couple different videos saying that, and I really like Pace. I think he's got some great ideas, but that works for him. It does not work for most people that are, well, really anybody in level 1 through 3. You're just not ready for it yet. And so I've got some income guidelines here. So we don't typically jump to the higher levels because you end up potentially costing yourself extra in administrative fees or some taxes because you jump high to level 4 before you're finished kind of completing the things in level 1 through 3. So another thing I always say, some of the strategies I mentioned throughout this presentation may actually decrease your profit or decrease your cash flow, but they're providing benefits to you. And so that's a good thing. So an example of that would be your cell phone bill. You pay your cell phone out of your business, that decreases your profit, but it's a benefit to you because you're going to have a cell phone anyway. So level 1 here is the startup level. So this is 0 to 80,000 profit. And what we're really looking for here is basically making sure your books are in order, you are claiming the deductions you get. And so I've got some deductions listed here. You're making sure your business mileage is claimed, making sure your business meals, even Starbucks coffees that you buy for a client or something like that. You have all your business travel, all your education and networking, all of those things. And so this is your foundation every year, right? You have to have your books in order. You have to make sure that your expenses are actually on the business. And we want to make sure that's on your business books so that we can clearly see that and project your profit there. Level 2 is cash flowing. So you actually got some cash flow coming in. You're kind of moving along. So I put 80 to 175 in profit. And here we're ensuring that you're doing those tax strategies, like I mentioned earlier, that are going to provide you with owner's benefits. So your home office is going to give you part of your home expenses are going to then be deductible off of your business. So you either do a percentage or you do by the square foot. Your home internet, if you are using your space at home and your internet to work, your health insurance can be deductible as a self-employed health insurance deduction. These are all things that, like, living your life, you're going to have these things, right? So you're going to have internet at home, you're going to have health insurance, you're going to have a cell phone, you're going to have a car. And so these things that you already have or need that you're already paying for, we're making sure that we move those over onto the business and that the business's profit is carrying those burdens instead of you personally. If you're familiar with Rich Dad, Poor Dad, you receive it and pay taxes, and then you pay for your stuff out of it. You've paid taxes on money that you didn't have to, because you could have just paid for your stuff first out of the business and then received the rest that you pay taxes on. So you're lowering the amount of income that's taxable when you do that. And then cash flowing rental properties are always a good deduction from your business because of the depreciation. So in level 2, I put cash flowing. So here's a couple details about the owner's benefits in level 2, going into a little bit more detail. So your HSA is something that you can move some of your healthcare expenses over to your business. So HSAs are pretty cool because they are the only thing with a triple tax benefit. So when you put money into an HSA, it is deductible. When the money is growing in the HSA, it grows tax-free. And when you withdraw it, as long as it's for medical expenses, that withdrawal is tax-free. So a new thing I heard about some people doing, and I think this is pretty cool, is they'll contribute to the HSA for years. And then they'll save all of their receipts from all their copays, all their deductibles, whatever, and they'll reimburse themselves all at one time. You've saved the receipts from all those times and you're able to reimburse yourself all that money, and all the growth from that money is withdrawn tax-free. So that's where the real benefit can come in. You can just like walk into your bank and say you want to set up an HSA. I got vehicle lease and purchase. So you can claim your mileage on a vehicle, or you can claim actual expenses. One of the things that was really popular a couple years ago was the bonus depreciation over 6,000 pounds, Section 179. A lot of people were talking about that. That is fading out. We are down to 40%. So right now, if you had a vehicle that you bought that was for business use, you used it 100% of the time for business, you would then take 40% of it in year one, and then the rest of it would be depreciated over the life of the vehicle, which is almost always 5 years. Most people have an office at home that they are using, and so you're able to deduct basically a flat amount, which is based off your square footage. So it's $5 per square foot is just the flat amount you can do. Again, kind of like we have the default mileage rate with the IRS, they have a default per square foot that you can use. If you claim that, then it's just really easy. You don't need all the documents of what your interest was on your property, what your utilities are, all those things. The other way that you can do that is you can claim your actual expenses. And if you do that, you do a percentage. So for example, if the square footage equivalent was 20% of your property, then you would claim 20% of all of those actual expenses towards your business. The Augusta rule says that you are allowed to rent out your residence up to 14 days per year, and you do not even have to mention to the IRS that you received that income. So if you have a home that you do not live in all year long and you want to rent it out 14 days a year on Airbnb, you can claim that, or you don't have to claim, you get the income and you don't even have to claim it on your taxes. The extra benefit that this provides for business owners is you can rent it out to your business. And if you rent it out to your business, then your business gets to take the rent expense and you still get the income that you don't have to claim on your taxes. Level 3 is really where you're starting to build your wealth. So this is 175 to 750 in profit per year, right? So you have your cash flow, you have your standard of living. Your life is not changing by a random swing in your income one way or the other. Then we can start looking at really building wealth and looking at strategies that allow you to build wealth. And so retirement contributions can be great here. You can do, if you have an S Corp, which you should by this point, then you can set up a 401k and you can do retirement contributions. And so retirement contributions, though, allow you to build wealth in a tax advantaged way. So that's the point of it. And then profit sharing on top of that. So you can max out retirement contributions and then still do a profit sharing of your company if you have extra money at the end of the year that you want to continue building wealth with. And so then that's an option. You can talk to your tax advisor about how much profit sharing you're able to do and claim as a deduction on the year. And then the last level is the legacy building. So this is, I've got my business established, I've got my books in order, I've got my cash flow coming in well, I am building wealth for myself. Now, what do I want to leave to my heirs and what do I want to leave as my impact on the world? And there are tax strategies here as well, such as that trust that was mentioned earlier, donor advised funds, which is basically where you kind of pre-do your donations and then you can give those out throughout the year. It allows you to maximize your donations in a given calendar year. Some of my clients are starting nonprofits for causes, and that allows you to actually deduct your charitable contributions as business expenses. So it can be really cool as a way to kind of give back as well. So, but I put these in level 4 when you really have good profit, you've really secured those wealth building things, you've really secured your cash flow, you're living a very comfortable life and caring for those, around you.
So if somebody wanted to set up a strategist session or something with you, how do they do that?
Go to my website, which is taylortaxstrategy.com, or you can just email me at greg@taylortaxstrategy.com. Yeah, this was helpful information. I'd love to talk to any of you guys and happy to come back and do it again and talk about some different topics in more detail if that's helpful as well.